Felix here, and welcome to this pre-market live on a day where people are feeling, oh dear, is this happening again? Another red morning. Tariff news once again, and I want to walk you through this just the way that people used to walk me through what was happening every day when I was working inside of a bank. We'd have a big morning meeting at an ungodly hour of 7:30 in the morning. Actually, it was 7 a.m. It was horrible. And someone very smart, usually from the other side of the world, would walk us through all the things that are happening, and it's like tremendously useful. So that's what I want to do for you here in the next few minutes. And this is it. Is this a stock market meltdown? Actually, most people are expecting that, and we need to understand that. There are some headlines out again on Bloomberg whether the AI rally is truly over. We need to understand the auto tariff hit here from yesterday, which is Trump's latest. The Tesla impact, I think, is going to be useful for a lot of you. And what are consumers really expecting stock prices to do in the coming weeks? And how do we read the markets like right now? What do we do right now? And why are tech stocks so bloody weak? Why are they not going up? Why are they the ones that are selling off hardest, which is what hitting a lot of your portfolios? A good quick market sentiment check. And then what happens next with tariffs? Like, how can we be prepared for it? And perhaps most importantly, how lots of money is going to be made in the next few months. And I want you to be part of those people who make lots of money. And because it's a bit of a gloomy day, we're actually joined here today by Winston. We have a Winston cam now and a button. Isn't that fun? There he is, sleeping though. He's thinking thoughts about green portfolios, I think. So I will refer to him occasionally when we need some real expert advice, because he's the one who does all the thinking and research around here, right? Don't you, Winston? Yes, I think so. So in all seriousness, though, if this is going to be useful for you, let me know. Put a 10 in the chat, because we've got 10 points to go through today. And Winston will walk you through it here today. My friend, biggest dickers, another Python fan. Hey, okay, so let's get straight into it. Loving all the 10s there from Scott and Patrick and Tony. Brilliant. Winston cam, love the Winston cam. We should probably just replace me with Winston, right? I think that'll be a lot more popular. I'm sure it'd be a lot more useful as well. So loving all the 10s here, and feel free to write Winston in the chat as well if you want more Winston cam. But let's, in all seriousness, look at this, and I'll bring Winston back in a moment. 51% of Americans, that's you, expect a major stock market meltdown. I mean, what sort of clipboard-wielding nutter approached you and said, excuse me, do you expect a stock market meltdown? Not like, is it going to go up or down? Is it going to melt down? It's a bit of an odd one. And, surveys, I don't really read that much into them, but I have a counter piece of data for you, which will, I think, help you understand that data point quite nicely here as well. And we're getting more Winstons than 10s now. So many streamers, so little likes, says Patrick. Thanks for the likes, my friends, as well. It helps spread real information, real education to more people, which is really what this is all about. Okay, so this is one of the things that also hit markets yesterday. And this is on Bloomberg. Microsoft has apparently canceled new data center contracts in the US and Europe. And they're doing that because they're basically doing less with OpenAI. So they're putting less money into OpenAI, and OpenAI is now using cloud computing services from other companies. So Microsoft is kind of diversifying its AI bet there. And they're still going to spend $80 billion this year, which is still quite a lot, but they're scaling down a little bit here. And then, of course, the fearmongers go, AI is over. That's it. TD Cohen is one of those. I think it's a little bit more nuanced. I think they were just going to build out all of OpenAI's demand, and they're no longer doing that, and therefore they're scaling it back a little bit. So, that's the way I would look at that. I don't think it's the end of the world. Now, this, though, is a little bit more serious. We've got Goldman Sachs. No, what's GM stand for? Car manufacturers down. GM particularly. Ford only down a little bit here. And what is it all about, Trump's latest thing? Well, I think this is probably the one chart that I would take a screenshot of if you are looking to make money out of the tariff story here. And that is, who's actually going to get hit from this? Well, Stellantis and Ford make 57 and 77% of their cars in the US. They assemble quite a significant part in Canada and Mexico. Now, this is assembled. And Elon came out So you might make you think, oh, Tesla isn't going to get hit with some sort of favor by Trump. But it's not that. Because Elon tweeted this and says, important to note that Tesla is not unscathed here. The tariff impact on Tesla is still significant. About 40% of all Tesla parts are foreign, bloody foreigners. Now, that's still much better than Ford or GM, where it's like 70% of parts, but it's still going to drive up costs and therefore squeeze margins. So it's not good news, right? For anybody, really. So what's gonna happen here with that? Well, what I think is going to happen is that in the short term, so in the short term, near term, short term, what do you think happens? I think just less car sales. People are just going to buy less cars. And in the long term, what's going to happen? And a lot of you are going to disagree with me on this one. In the long term, Tesla wins. And they do that in two ways. One is lower prices, because they have more American components and therefore their cost base is lower. But in the real long term, and I think that's really the one that I would focus on if you have a little bit longer term horizons, the next generation won't own a car. And I know that if you're American, that's a little hard to imagine, because to you, car ownership is a big thing. You're a bit like the Germans there, right? So why? Because we're going to have basically auto as a service. There'll be robocabs. They'll be way, way, way cheaper. You don't need to own them. There'll be an app. You'll have some sort of subscription to it, and it'll take you all everywhere. And you need to think about a thing. It'll be perfectly safe. You don't need to drive. You don't need to think about a thing. And you just be napping in that car or snacking in that car. I appreciate a lot of you. I'm not going to give up your cars, right? It's my freedom. I get that. But the next generation is going to grow up with this and go, why do I want to own a car? And it's already a fact if you go to major cities, right? A lot of people like in New York or somewhere like that, they don't own a car because it's just not necessary. Ubers are plentiful. But the robotaxis are going to be affordable, whereas Ubers are getting pretty expensive, I think. So who's going to win from this? Well, who's ahead with building these robotaxis? It's Tesla. I know Google does a bit of it, but I don't think it's quite the same technology here. So I think Tesla is going to win from this in the long term. But in the short term, there'll be pain all around. Pain is all around us. It's everywhere I go. So now, before we run through the next 5 things here that I want to really, really explain to you, because I think it's important that, well, us retail investors understand this, and Winston, of course, there is Winston. But let me know if you actually find this useful, if you actually want me to walk through all the steps of the market here and I do this for you. Just write like, I want it, or just write want in the comments down below. And that way I know that you actually want the information, and Winston's going to do more research here for you. Now, the same vein, Winston said to me today, we should do something bigger than this, because a lot of people are getting really worried about their portfolios, right? Like, what if it goes down another 20%? Who'd be worried, right? How many of you are holding stocks right now that are significantly down, right? I imagine most of you. I mean, put in the chat like the stocks that are down that you're holding. And I use a system to invest that I've used for years. I call it the Wall Street Protocol. And it's based on what the most successful traders and investors in the world have been using literally for decades. And Winston and I use it every week. It takes a couple of hours tops, and we're doing very, very nicely with it. And I know some of you guys are my students already. You know what I'm talking about. And you can actually learn the foundations of that in a very, very short period of time, like an hour or 2. And our mission here is to literally, we want to make 1 million people financially free. And I'm loving all you guys writing want here in the chat, because it'll be more fun. Life will be better. More people will have a big smile on their face. And I've been where you are, which is in the corporate world and trying to figure it all out and not really understanding the money and markets and investing and then losing money and all of that. So what I'm going to do for you on this Saturday, I'm going to host the final live webinar that we're going to do here. And I'm going to teach you not just the rules on how to win big in the coming rebound, which will happen, but I'll also teach you how you keep those winnings when markets crashes. And that, I think, would be the most useful lesson for anybody out there who's gone through the last like 20, 30 days here, because it hasn't felt all that good, right? So there's a link down below. It's felixprehn.org/webinar. And you can click on that. I'll put it for you in the chat here as well. And it's literally this Saturday morning, 11 a.m. It'll be live. We'll go for probably about 2 hours because I want to answer a lot of your questions. So if you want to join us there, register for that right now, not later or tomorrow or in another day, because it's going to get filled. Okay. So we're going to have 1,000 spots there. It's completely free. And link is also down below in the description and also in the comment. I've just pinned it. So if you want to join me and actually really take this experience to the next level by learning something from this dip and going, well, this pain has actually been worth it because it's what motivated me to get really, really good at this. So that's what we're going to do. We're going to teach you that. Winston will be there probably, don't you? When you Winston, you'd be like, I'd rather be on a mountain. Charlie is saying, type win in the chat if you're going to go and join us live on Saturday morning. That's very cool of you, Alpha Charlie there. Okay, so I promised you another point here, right? So I promised you, if you've just joined us, let me go very quickly to the top of our list here so you know exactly where we're at, right? So what are consumers really expecting for stock prices? That's where we're at right now. Like, how do we read markets right now? Why are tech stocks so weak? What's the market sentiment? What happens next? And how is lots of money going to be made over the next couple of weeks? That's what's coming up here. We just briefly touched upon tariffs there. And this is a sort of chart Wall Street makes. Takes about 15 minutes to stare at it to actually try to figure out what it means, right? That's at least the way I feel about these. And well, what have we got? Well, basically, we've got a lot of consumers expecting lower stock prices. So basically falling prices. That's what they're expecting. Now, is that an outlier? Yeah, we had that once in 2020. Something happened in 2020. Does anybody remember? I don't know. Somebody wanted to inject me with something as a result. We did that in 2012. We did that in 2008. And then before that, we did it sort of 1998 or something like that. Now, those were all dips, right? They were all dips. But what really is actually interesting from this data, and I think this is the real lesson, the real takeaway, like the bottom line here, is that a year later, in all scenarios where we had these massive dips, except for 2008, we were down minus 3.5% a year later. But in all the other ones, we were significantly up. I mean, significantly up, right? So when everybody is fearful and everybody is panicking, if you know what to do and you know the right steps and you understand the patterns of how the market moves, you sit there with a big smile on your face like, you know, this guy here. He sleeps so peacefully, doesn't he? Do you think we're going to need to get him a little face camera light as well? So he looks a bit more well lit. I'm not sure he would like that though. He's got his tennis ball. So there are some facts here. Now, how do you read the market right now? Let me give you just a couple of charts here that I would look at to understand what's going on here. So this is the S&P, ticker symbol SPX. You could also look at SPY, it'd be the same thing. And I'm in Trade Vision here, right? Which is, again, the app that we built to give you guys the best data out there to make the world a fairer place. And you can get yourself a free trial to it down below. Now, if I turn on the long-term moving average, which is a 200-day moving average. And that's how the market works. We look at these like moving averages. That's like how the whole market looks at things and goes, well, is it going to go up? Is it going to go down? Is it a good time to buy? Is it not a good time to buy? Well, what do you see? Well, what you see is that, let me sort of highlight that 200-day moving average line here. That's sort of the line that I'm drawing up, right? It's a brown line there. I just made it purple. Now, so I'll label it for you too, so it's really, really clear, okay? That's the 200-day moving average. So what's happening with the stock, the S&P, the index? Well, we bounced against it and we've come down again. And that's rarely a good thing. It's just one of those things that we're basically saying, well, yeah, the recovery isn't quite here yet, we're bouncing off it. Also, the last 2 trading days where we were meant to be recovering and going up, no one was trading, like almost very, very, very little volume, right? Very low volume. So you don't get big bullish sentiment signals when there's very low volume. Now, if you think this through, why are the big boys not buying the S&P, the hedge funds and the banks and so on? Well, there is the 2nd of April, right? And we get to that a little bit more in a moment, which is, what is the market expecting Trump's going to do on the 2nd of April, right? So far, he seems to flip every other day. So that's important to understand, right? So this is a little bit of a bearish signal. If you look at the Magnificent Seven stocks, the big tech stocks, which is what most of us are probably invested in one form or another, what do you see again? Well, can you see the same thing? That's the 200-day moving average line here, right? And boom, we bounced off against it. And that's why the old mantra is nothing good ever happens below the 200-day moving average line. That's a quote from Paul Tudor Jones, one of the real great hedge fund managers out there. And he's right. Now, if you have a long time horizon, buying below the 200-day moving average line is historically a good thing to do for an index, not for individual stocks. Remember that, I keep telling you that. What about tech stocks? QQQ. Well, same story. We're bouncing off the 200-day moving average line, not particularly good, except actually volume on the sell-off was a little bit bigger than on the green day the day before. So again, not particularly wonderful, right? So those are the things I would just look at. And if you understand those and you can look at those yourself, you can make better decisions because you are starting to see the patterns. As I say, if you really want to learn those patterns, come and join us tomorrow at, Saturday morning, 11 a.m. Eastern time, and I will actually genuinely teach you for about 2 hours. We'll do a big Q&A and so on. And Winston will be there too. Oh, he's just given up, right? He's like, today is not a day where I want to be doing much. So there we go. So that's important. Now, I also looked up what Goldman Sachs thinks. Now, Goldman Sachs is probably the most respected investment bank out there. If the word respected in investment bank goes in one sentence, it's up to you. And here's what they're saying. They're saying the NDX, that's the NASDAQ, failed the 200-day moving average line. Exactly what I just showed you. There is a continued chop into April 2nd. They're basically worried about Trump. And then there are negative stories around data center AI this week, China, NVIDIA, environmental concerns. So China has changed their rules about energy consumption around AI chips, which is essentially targeted to exclude NVIDIA. And so yeah, there's that. And Alibaba came out and said there is an AI compute power bubble, which isn't great. So that's basically it. So no one's really buying anything. Everyone's waiting to see what happens. And that might therefore be the smart thing to do, which is what I've been saying for the last, at least last week, right? I've been saying, don't do much. Now, there's the fear index, and we're in fear. So if you're a long-term investor, what do you do when it's fearful? Well, actually buying over here and selling over here has generally been a very, very good strategy. It's hard to do. It doesn't feel right. And you're going to want to have some rules around that. And I sold out of some things yesterday and voluntarily, like some of my SoFi positions closed at a profit, which is the right way it should work. And that's okay. Like, they close themselves out and I'm sitting on quite a lot of cash and that's good. And it gives me opportunity to nibble a little bit more on the index. But you also want to be aware of the general sentiment and not just be fearful at that moment, but be smart, right? Now, if you thought that Wall Street knew what Trump was going to do, then, and if you thought that I could spell, then you'd be mistaken. What tariffs do, they've asked, I think, 400 bankers and asked them, what tariffs do you think we're going to get? And some people think universally it'll be 3%, 5%, some people are 6, some people it's 8, some people think it's 9, some people it's 10, some people think it's 11. Basically, no one's got any freaking idea. I doubt Trump knows, to be honest with you. He's probably going to make it up on Tuesday. Or maybe not. Maybe he's more strategic than he gives off, but nobody really knows. So what do you do if nobody really knows? Well, you do very little. That would be the smart thing to do. So it could be, the auto tariffs, they didn't completely crash the market. It was just a bit of a dip. So it could be that this is a non-event and it's like going to be the start of a tremendous rally, the most beautiful rally the world's ever seen, and it'll be called the Trump rally that we'll all remember forever after and worship, something like that. Or it could be, the beginning of another 10% dip. Like, we just don't know. So you got to position yourself for that. And I'm going to talk to you a little bit about how to do that in a bit more detail on Saturday if you join me for the live masterclass, if you actually want to profit from what's happening here in the next few weeks. But at the moment, everyone's just like, I haven't got any idea, but let me go on CNBC and talk about it for a few hours because I don't know anything. They don't know anything. Nobody knows anything. Let's talk about it. So why am I telling you there's going to be lots of money to be made? Well, look how much money is being made on Wall Street. The average cash bonus is now $244,000. So if you think there is no money in investing a little bit more actively, if you think that it's a zero-sum game, like some people think, well, someone's always losing, someone's always winning. Well, these guys who are getting cash as a bonus, they're already getting a salary, cash $244,700, plus they're getting stocks, they're getting share bonuses, right? So they're getting another share-based bonus on top. Those guys would tell you, guess what? There is a lot of money to be made if you know our rules. If you don't, you're basically screwed. Well, you can buy the index fund and get those returns, and that's decent. But the really smart people want to do better because that's the only way to really get freedom, in my humble opinion. So if you want to come and learn with me what these guys do, learn the Wall Street rules, come and join me on Saturday, felixprehn.org/webinar. It's completely free. And we're gonna have a blast. It's Saturday morning, 11 a.m. So most of you guys in the US should be awake. Even you Europeans can join if you're not against making money. I tease. And if you were in Asia, it might be a tad late for you. But if you're motivated, you can stay up on a Saturday night. I'll give you I'll write you a little pass if you need permission from a parent. So having said all of that, super happy to look at the market, which is opening in 7 minutes. And it's looking a little mixed. It's looking not terrible. It's not looking wonderful. But Meta and Nvidia down. Nvidia, that's the China news. Meta, not exactly sure, to be honest with you. Microsoft's flat. Google, Apple, Amazon, Walmart, JP Morgan, all down a little bit. Big boys down. Tesla trying to figure out whether they wants to be green or red. And that's just a question of time frame, really. And then in the consumer durables here, GM is down 7.9% right now pre-market, which, because it's going to hit them pretty hard unless there'll be some exemption because Trump doesn't want to piss off the union. I don't know. We'll find out. Are those jobs worth it, says Nathan? The banking job, I don't know. You learn a lot. Like pretty much everybody I know from banking, and they've all retired pretty much now. Some of them have their own funds, some of them have their own hedge funds, some of them are consultants, a lot of them are retired, and they mostly live pretty good lives. So I think for them it was worth what they learned. The access to information, I think, was worth it. It was a pretty hard way of learning it, I'd say. A lot of blood, sweat, and tears and that kind of thing. But they're financially free, and that's ultimately the goal, isn't it? So if you I think if anybody wants to get a job, finance is probably the only place where you could potentially work for a short time period, maybe 5 years or something, or maybe 10 years, and come out and be free. Pretty much any other job, you're just further in debt and your mortgage is a bit bigger and so hard. But those are the smart guys. They're equally probably 10 for every one of those that I know who just spend all their money on Porsches and Ferraris and quit and have no money at all. So they also exist. So, it depends on who you talk to. You get paid to learn at a banking job. Yeah, that's basically it. Although at the moment, they're quite hard to get because they're all sacking people. Will Trade Vision have a heat map in the future? Yes. I've seen the design, so it's coming. Guess we won't get lower prices like Trump promised. Well, you do have lower oil prices. So I think the Trump inflation thing is essentially lower energy prices. That's sort of happening. Now, if you could end the war in Ukraine, that would also just lower inflation generally, because that's like a lot of fertilizer and agricultural products come from there. But yeah, the tariffs on cars, now they make all cars more expensive because you don't have 100% US made cars. Right? If you did, then it would just be a question of, well, okay, my choice is limited because the foreign stuff got more expensive. But yeah, it's going to make Teslas more expensive. It's going to make Fords and GMs more expensive. Now, a car isn't something you have to buy every year, right? And with financing and so on, it might not have a huge impact, especially if interest rates come down. But yeah, tariffs are a tax, right? They're a form of a tax, and someone's got to pay them. Eggs are also cheaper. Eggs are a lot cheaper. Orange juice is a lot cheaper. I don't know if he has anything to do with that, but of course he'll take a credit. He's a politician after all. The Midwest is getting cheaper, is it? Okay. Ferrari is down too. Yes, well, again, tariffs on that, right? So far is tanking. Every automaker except Tesla. Yeah, so what have we got here? We had someone saying SoFi is tanking. Yeah, I got knocked out of some of my SoFi positions yesterday, which isn't a bad thing because I made money on it. But it just tells you a little bit about how this recovery isn't really going anywhere. And you can probably see where that happened, right? Trend line. That's why I got knocked out. And that was a good move because now we're a little bit lower. Also, Robinhood has announced essentially banking features, banking offers. And you know, one thing I really, really like about what Hood just announced, an insanely cool product offering, which I'd never thought of. Literally, I would never have come up with that in a million years. It is, does anybody know what the new Hood offering is? Put it in the chat. Let me know what it's all about. Okay, well, I'll tell you. It's cash delivered to you. So you can go on the app and say, I'd like $200 cash, please. And someone will show up and bring you $200 cash. Now that's pretty cool. Why is that cool? Well, A, of course, it's going to attract, I'm sure there'll be some sort of fee around that or minimum whatever amount you're going to have or something. But it's cool. It's sort of luxurious. It's convenient. And of course, it's also a safety issue, right? A lot of big cities are not that safe anymore. I mean, do you enjoy going to an ATM, right? Getting cash out? You keep looking over your shoulder. In most places you do. The only places I don't are Monaco, Hong Kong. Anywhere else? Not really sure anywhere else. But in those places, I really, really don't look over my shoulder because no one would ever nick the money. It just wouldn't happen. You could walk away with like a couple of €1,000. I used to be, I was in Monaco. There was a very, very well-known billionaire living very close by, and he'd come in once a week to the ATM I could see from my room, my apartment, and he would get out the biggest wad of cash imaginable. There was like almost no limit on what you can get out. I think you can get out about $5,000 in one push button, which is very cool. So it's a cash economy down there. Now, UAE, yep, that's correct. Dubai, also, you don't worry about it. Absolutely. And Japan, of course, yes. Japan, I should add to that. Malaga, I can't comment on that. Singapore, yeah, it's pretty close. I still look over my shoulder slightly when I get cash out in Singapore. Sorry, my Singaporean friends. London, you don't need to look over your shoulder because the moment you do, the money is gone. And there is a knife in your ribs, and the person who stabbed you will then get let off. And you see that there seriously is a story. I retweeted it, and I know we are strained into politics sometimes. I don't think it's political, to be honest with you. There is... I reposted this because I think it's ridiculous. There is where is it? I post mostly useful stuff here, but go on this. A migrant pedophile who attacked teenage girls is going to stay in Britain because he's an alcoholic, and he would face inhumane treatment if deported to Pakistan because there is no treatment there for alcoholism. What? You should have thought about that before he attacked teenage girls, don't you think? That's obviously just messed up, and that's why London's got a lot of crime. Now, you want to see Winston? Where is Winston? Winston is he's snoozing, really. Where is he? There he is. Whoops, hang on. There he is. Can we zoom in a bit more on that? What do you think he's thinking about? I don't think it's the market. I don't think it's the market. So there is the new Winston cam. Thailand, okay, that's nice to hear. Scott, my friend, thanks for tuning in every morning. I appreciate you too. I think my brain just died reading that. Yeah, it's absurd, isn't it? There is another one also, which is absolutely ridiculous. And this is even more political. Look at this. An Irish teacher refused to use the preferred pronoun of a transgender student. He was fired. He was ordered to have his 40,000 euro, which is about 40,000 US dollar, checking account seized. And the Attorney General is going to seize his other assets, including his home and car, because he didn't call them they, this, or you know, whatever they want to be called. What? You know? Yeah, and you're wondering why people are electing more, you know, extreme parties, because the nutters in power are pretty freaking extreme to start with. So yeah, madness. You think it's such rubbish? Most stabbings in London are young kids stabbing each other for drugs. That's probably true in terms of numbers, but when I'm in London, I'm in Chelsea, we have a little place, and I know quite a lot of people who have gotten stabbed, or know of people who've gotten stabbed in Chelsea, about 500 meters from Harrods, dropping off their children at school. And yes, they were wearing a stupid watch, but you shouldn't really get stabbed because you're wearing a stupid watch, right? So crime is rampant, I think. I think it's rampant in London, and they're in denial because it's foreigners doing it, and they don't want to address it. It's weird. So yeah, Alpha Charlie, sorry about that. When your brain explodes. Could you look into a firm? Yes, we can do that. We can look at a firm which has not had. Whoops, I'm breaking things again. Somebody running an update while I'm live again. We're running lots of updates at the moment here on Trade Vision, which is what this is I'm looking at here. And well, the exit signal here, the bearish signal, was a pretty good one, wasn't it? At $68. You could say, oh, in hindsight, you were right. Well, we've actually been quite right. Our trend indicator there is about beating buy and hold by about 210%. Now, I like Affirm. I think it's a great business. Moral or not is a whole different story, but I think it's a great business. But yeah, it's now below its 200-day moving average line. It is not a pretty place to be, and it's not looking particularly handsome here. So yeah, not a great place. But I do think that they're essentially becoming a credit card company, right? That's essentially what it's becoming. So this whole buy now, pay later, and people are up in arms about it because you can now buy a Dorito with buy now, pay later. But that's basically what a credit card is. So they're just going to compete with credit cards. And I think that's a huge market. And I think that's going to work really well. King, last time you were in London, you watched gangs fighting. Yeah, it's weird. It's just odd. I mean, I lived about 7 or 8 years in London. Love the place. But whenever I go now, I go less and less. And I stay in my little area, which is pretty safe. But I like all the people I know there who live there, and most of them are, retired bankers and that kind of thing. They dress virtually like homeless people because they're worried they're going to get mugged. And I had it. I was walking crossing Brompton Road, which is just in front of Harrods. Bike swerves up to me, right? I takes 2 steps back. The guy just about avoids me and keeps going. Black helmet, black outfit, black bike. I mean, why wouldn't you stop a guy? Because actually the visor is illegal. You should just get stopped. But there's obviously no police. They don't care. So is Klarna not the same? Yeah, it's sort of the thing. The same thing. Right. The heat map's coming soon to Trade Vision as well, my friend. Bakawaka, you have money in a VSAT from an employee stock plan. Now, I don't know what a VSAT is, so I can't really give you any thoughts on that. Now, employee stock plans are great if your employer contributes equally, like a 401k. So max your 401k out up to and only up to the moment where your employer stops matching your contributions. After that, it's a terrible thing to have your money in. So you're going to have to look up how yours works. Is AMD tanking again? Well, I did tell you it was more likely than not, right? Yeah, there it is. There it is. It's gapping down again today. And this doesn't look too bad, right? But the more you zoom out, the more ludicrous this one becomes. What else we had there? Nike. Someone's saying, is Nike breaking out? When do we get back into the market, says John? Come and join me on Saturday morning, my friend, and we'll do a proper educational session there on the live masterclass, because I want to make sure people don't miss the rally. But you also don't want to buy the falling knife. Like, this is not a breakout, my friend. This is terrible. This is just horrible from Nike. Absolute horror show. And nobody should touch this. Like, nobody. And no institution will touch Nike at these prices because it makes no sense. VIX is moving up. Yeah, and you'd expect that a little bit. I'm actually kind of wanting it to stay a little elevated because we'll make max money there. So yeah, VIX is picking up to 19. It's still below 20, so nothing to worry about there too much. Now, what drives the VIX higher? Well, largely people hedging. What does that mean? People buy put options, and therefore they protect their portfolio going into 2nd of April, and that could drive us a little higher here. At the same time, though, this might get a little bit technical, but for you options traders out there, you know what I'm talking about. The put premiums have come down a little bit. So people are hedging a little bit less aggressively. At least they were there yesterday. Jim Cramer said buy Nike a few days ago. Oh dear. How about Palantir? Let's have a look. Palantir has weathered the whole sell-off pretty well. I mean, we went down, we still went down a fair bit, 39%. But it's kind of being fairly stable here. It's above or at the 50-day moving average line, but it's pretty rare for a tech stock right now. So I just think the government expectations there and the moat there for these guys have built is pretty good. This is the moment I buy. Nope. We had a failed breakout here. So resistance at 160. So watch it. Don't buy it. That's what I would say, but up to you. Ali Abbas says, how to become Felix? Just tell everybody, look at the moving average. Just, there's a lot in that. It is way simpler than people think. People always think that investing success it means you've got to do something really, 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 really complicated. And it doesn't. I mean, look, Winston here, he's doing very well. He's financially free. He doesn't have to worry about anything. He's got about half a dozen people who look after him, and he's very, very happy. So in all seriousness, though, yeah, it's a lot more simple than you think. It is not rocket science to make money from money. It's just people have been taught you need a million indicators. You make it really complicated. You need to stare at all these screens. You need to have lots of screens. I don't have any screens around me. I never have a stock chart open. Like, you will never see me sitting on my desk with like 10 stock charts open. Like, why would I do that? What would possibly be the benefit? Like, can I move the stock by looking at it? No. So simplicity is where the money is made. Having rules that you trust and that you execute flawlessly is how it works. And that's really what it's all about. What do you think about Trump revaluating gold? Oh, they said they won't. So I think that's a big story. Jay, you're near selling everything and come back in 3 months when we know what's going to happen. Well, what happens after every sell-off? Did you see the chart I showed you earlier? After pretty much, it depends on what you're in, but after every sell-off, with these kind of momentum where everyone's thinking, oh my God, it's going to get worse, right? A year later, this is how much people were up by on average, right? For the last 2, 4, 6, 8 crashes. So if you haven't sold yet, might not be the most brilliant time to do it because we're below the 200-day moving average lines, provided you have enough time horizon to wait for this thing to recover. But what you really want to learn is that it doesn't feel good where you are right now. And for the next time this happens, and I guarantee you this is going to happen again, a 10% drop like this one right now happens once a year. It's not fun, is it? But if you know what happens with it, then you're like, woo, this is fun because I know how to make money out of it. And we're still making money out of it, and it's going to be good. Phil doesn't like my views on crime. Phil thinks crime is good. I can just tell you, like, I think it's a free world. You don't have to be here, my friend Phil, and we can disagree, and I appreciate that. But if I tell you that my friends are getting mugged and stabbed, and that people are trying to mug me when I go to London, that's just my experience. And I can tell you those are not nice, friendly, white English people. And that's not a racist statement. That is just fact, right? It's the, I don't know, what are they? Albanian mafia or something, right? It's organized. It's very, very organized. And you know what happens to all the phones that they steal? They put them in a courier bag and they leave the country about an hour later. It's insanely well organized. It's just nobody wants to look into it because it might be racist. And it's a sad state of affairs. I think there's one job the government has is to keep the country safe. That's like the number one job, right? But they don't do that. And you guys pay a lot of taxes. I don't understand why people live there, to be honest with you. That's why, look at Dubai, that's why it's full of Brits, right? So there we are. Now, but you can disagree with me, that's okay. But give me some facts. Don't just say, like, be quiet, because it's unlikely to work. You know, I have a bit of a Tourette's problem, as we've already seen. So, have you been to El Salvador? I have not been to El Salvador, no, although I hear that you have glorious prisons. Did you see that funny video? The, what's the secretary or whatever she is? Trump's lady, and she's standing in that El Salvador prison. Very odd. But yes, and many other places have gone down too. Yes, it doesn't make it any better, does it? Cape Town is still a bit rough in certain places. I hear that is true, yes. And obviously South Africa has got a probably much more serious violent crime problem than the UK does. Yeah, Scott, my friend, I'm a big believer in the whole broken glass theory, which is like how old policing used to work. Like if you allow one window to be broken, like it's finished, it's all over. And that's exactly what's happened because they like don't prosecute small crimes and therefore bigger crimes happen, right? But yeah, there we go. Right, what's Hong Kong like? Hong Kong's lovely, actually. I mean, it's a very, very, very safe place. It's tropical. It's like Miami climates, very nice beaches, beautiful mountains, lovely hikes. Winston likes it a lot, which is why he's snoozing so happily behind me here. He did a nice hike this morning. That's why he's looking a bit tired. Felix spitting up political facts people other people can take, and that's okay. Like, I think just disagree with it and give like your side of the conversation rather than just like, you're a racist, you're an idiot, stop talking about it. And you know, that's not really how things improve, right? We used to have conversations with people. I said it the other day, I have a very good friend and he's a raging socialist. And we've been friends for 20 years and we're still friends and we'll continue to be friends, even though we violently disagree on most politics, and that's okay. So Palantir is down a little bit. Let's have a look at a couple of other favorite stocks here. SoFi is down 7%. So I think that's the Hood news, to be honest with you. Robinhood basically coming after their business, essentially copying it and at least from a marketing point of view, doing it better. Although Robinhood is also down 2%, so the whole market's down. Anything else we want to look at here? Let's have a look at NVDA. They're getting hit with some Chinese regulations today, which means they might lose some of their Chinese market. Now, I would imagine that NVIDIA will redesign the chips that are being targeted there by, I'm blocking some of that with Winston, aren't I? Being targeted there by the Chinese government on some sort of environmental regulation. They can probably just retweak them, but for the moment, at least it's another risk. London has a homicide rate of 1.6. Yeah, we're not talking about homicides, my friend. Homicides is a different story. New York has neighborhoods that are way, way, way worse. Look at, the thing is actually most of these crimes are not even recorded, right? How many phones get nicked a day in London? How many people get stabbed a day in London? Look at that, and then look at how many of those get arrested. It's almost zero. And that's the problem. And it's escalated. It used to be like a South London problem where gangs were fighting each other. Nobody really cared. And that's maybe racist too, but that's true. That's the reality. That was probably actually racist. Nobody gave a shit. But now different gangs, not the ones from South London, are basically mugging and, breaking into everything that moves in central London. So the banana plants are looking a little weak. Yes, they need a little bit of love. I repotted them. Well, I didn't, but I had somebody repot them. And that means that they need a little bit of They need a little bit of love, but they're growing new leaves. You see that leaf there on the top, on the right one? It's coming out, so they'll be just fine. Banana plants are actually very, very, very resilient creatures, which is why I like them. In the UK, cops don't even carry guns. Well, in a way, that's a good thing, right? Because it used to be safe. You didn't need to. But nowadays, obviously, that seems a little silly, because if the other side comes up with a machete, which is what you're seeing in London, then what are you going to do with your little stick? Is it Hong Kong you live in? Most of the year, yeah. I'm sort of between here and south of France a bit, and you know, one or two other places. But yeah, I'm here a lot. I like it a lot. It's just a lovely place. I really like it. Castle Peak hike. I know the hike well, my friend. I know pretty much every hike well in Hong Kong. Tesla. A few of you are writing. Yeah, Tesla, it's the tariff news. So Tesla is actually up on the news, which means people are seeing perhaps a silver lining here. But note, it is still below that brown line there, the rather, you know, mad-colored 200-day moving average line. So it's still not out of the woods by any stretch of the imagination. It's just, it's better than GM, because GM make significant numbers of their cars outside of the US, assemble them, and they use about 70% foreign parts. Tesla uses about 40% foreign parts, so a little bit better off for Tesla, a little bit worse for GM. Sean, you've seen me a few times. Well, say hi next time, my friend. Just say hi. Just come over. Financial freedom comes with holding yourself accountable, says Scott. Yeah, and you're right. You're right about that. You're right about that. Like you have to stop blaming the economy and the market and the government and manipulation and all those things. And they're all factors. But the reality is you can make money regardless, and you can make very good money regardless. You can set your money to work, but it requires you to actually learn the skill of how money management works. And most people, they're really honest with themselves. They just buy what other people are talking about, and then they hope for the best. And I see it every day, right? I made a video last Monday about a stock called Zim, and I said, I think the fundamentals are very interesting. And then I said, but I'm not buying it yet. And then, of course, somebody didn't make it that far in the video and says, I'm buying it. And of course, you should never buy this on the basis of what I say anyway. And now the stock's down. Now, one of the reasons the stock is down because they paid a massive whopping dividend, which tends to do that. But yeah, and now they're like, well, what do I do? Well, learn from this experience, and next time you buy something, do your research first and know when you're going to sell. If you buy something and you don't know when you're going to sell it, how will you ever know when to sell it? Now, you might be thinking, well, I'm going to hold it forever. I doubt that, because I think at some point you're going to want to access the money. Because why are you buying stocks? Because you want more money, right? You want your money to grow. If you're never going to sell it, then what's the purpose of the whole thing? It isn't some weird charitable endeavor, right? Where you want to leave all the stocks to you know, your offspring. You probably want to leave them more money. And in the meantime, you want to enjoy the money. So there we are. Zim does have a ridiculous dividends. Okta sell signal. Again, I think that's a stock that's very interesting. But at the moment, it's getting, well, actually, it's still doing quite nicely. It's actually doing quite nicely. But yes, depending on where you bought and you know, what's your risk management? You know, there would be, you know me, there is always a temptation to draw a line. And maybe that line is actually could be a little off. We actually just need 3 points, which would be these three. And it might be a consideration to do something about risk management if you haven't already, right? Now, I'm not saying you should, but I'm just saying you need rules by which you live. Otherwise, you never know whether you're doing the right thing or the wrong thing, right? Some days you wake up and you feel like you're a genius, and some days you wake up and you feel like, oh my God, what have I done? Why is my portfolio red? Because you've got no metric to like judge your decisions by. You're making it up as you go along. So what I want to do for you, and what Winston wants to do for you, there he is, he's paying attention, isn't he, is give you those rules, and you can learn them with us for free on Saturday morning. 11 a.m. Eastern time. And we'll spend about 2 hours probably of my Saturday to teach you guys to make sure that if you're suffering right now because the market's down, you never have to suffer again. And secondly, you don't miss out on the glorious thing that's coming next. Because after suffering, we get what? Springtime, and then we get summer. So most people get so scared by the suffering of the winter or whatever it is right now that they will then not invest in spring and summer. And then they'll invest again in the next winter, and then they have the same experience again and again and again. So we're going to do something about that. So come and join us at felixprehn.org/webinar on Saturday morning, 11 a.m. Eastern time. There'll be 1,000 free spots, and I'm excited to see you there. And I wish you a beautiful day. Take care.